Good evening, everyone. Welcome to our Week 16 recap. Going to take a look back at last week's action and see how it's going to help us prepare going into the week ahead. First up, we got our June live cattle. We saw a continued upside across the cattle market last week, both feeders and fats gaining some ground. This June contract saw a nice early push on these live cattle, saw a nice early push in the week, getting up to new all-time highs on Wednesday before balancing out around this 208 area to close out the week. Did see price trade on Thursday and Friday in about a $1.50 range, but closing near the highs, showing the bulls closed the week on a high note. I'd expect the bulls to continue pushing above this 208.40 area early in the week and making a push into uncharted territory. Any offers below 207 could just force a little bit of profit taking and pullbacks, but we do have the uptrend intact and dips should be bought. Be ready for support anywhere down here to this 20-day average as this trend remains strong. Let's jump over to those feeders. The August contract became the new front month last week, so we're going to be keeping an eye on that one going forward. All week long, we saw just a steady grind higher. Price is not really in a hurry to go anywhere, but just making a nice steady grind. Did see Friday close above 294, which is a big win, getting above this prior pivot before the breakdown during tariff day. Prices closing up here around 294.50 is a good sign for the bulls. Expect them to keep this momentum carrying into next week. Early bids above 294.5 should get the ball rolling into new all-time highs and have this market set its sights on $3. Next up, in the corn market, early in the week we saw a pullback, retesting our breakout level from late March. We did see a price put in a low at 477.25, but buyers were stepping in and finding support here at our key moving averages at the 20 and 50-day average. We did see a bounce on Thursday off that 50 and a brief rally up into the 487 area, which was our bear pivot for last week. That's going to be the area we want to recover and get above to start this next leg higher for the corn market. However, we do have export and crop progress reports being released tomorrow throughout the day. Definitely some events that could bring in some volatility. As long as the bulls can handle or keep this market above 477, that's going to be our make or break point going into the week ahead. Above 477, the bulls will remain in charge, but if the bears are able to get a break and that volatility hurts this market, we could see a push back down into the mid fours and see this market just kind of get stuck in a range and chop around these major moving averages. But in the meantime, we expect the bulls to pick up this pullback we saw last week, and if the trend stays intact, we should see prices start heading back towards $5. Next up, in the crude market, crude oil balanced out in about a $2 to $3 range all week long. Chopped up around our pivot points being at 62 and 64 roughly last week. We did see price just swinging back and forth, taking out both ends of that, and finishing the week here around 63, not really going anywhere. We do have the big picture downtrend still at the bears, the winds at the bears back there. We are seeing resistance at the 20-day average, keeping this market capped from going any higher. Mid 60s are a solid resistance point, showing these prior lows dating back several years are holding price below it. I'd expect the bears to continue pushing lower. If we can get a close below 63.35, we could see that momentum break and push us back down into the 50s. But in the meantime, we could see just continued chop here as this market continues to just chop around and not see much volatility over here following the big breakdown early in the month. So be ready for the bears to continue pushing with closes below our bear pivot, but if not, we could just see continued chop around the 64 area. Next up, we'll jump over to our equities. The equities markets saw nice recovery efforts last week. We are seeing some good signs of accumulation beneath the surface, lots of individual names creating good bases and forming nice pivot points. Some stocks already breaking out and pushing into new highs, but in the meantime, a lot of the major components of the indexes still have a little bit of work to do. The indexes, the S&P specifically here, is going to need to get a push back above the 50 and 200-day averages. A close above that will really confirm any sort of new uptrend. At the moment, we still are remaining a bit neutral here, as we do have a lot of resistance and overhead supply dating back to this April 2nd news day that forced this big shakeout. So be looking for resistance anywhere up in this 57 to 57.75 area, as the bears are going to be trying to fight back and defend that line. But as long as the bulls are able to hold 5,500 and 55.62, we could see a potential recovery effort step in. Cautiously optimistic is the theme going into the week. The bulls definitely have a chance to make a move here and get this market turned around, but given the reactions to headlines recently, I wouldn't say we're necessarily out of the woods yet until we can get a good clear and close above these major moving averages and the April 2nd tariff day announcements. Anywhere above that could open the door to smoother sailing and put the wind at the bulls' back and really give me the confidence in a new uptrend. But in the moment, I wouldn't be expected to see continued volatility in this 55 to 5,700 area. There are some good deals out there. Be on the lookout for individual names that are holding their major moving averages and clearing their pivot points. But in the meantime, the indexes still have a little bit of work to do. That's all we got for today. Let's have a great week 17. Thanks.